Hi there, I'm David from DB Chartered Accountants. After 5 years in waiting, the government has at last published a consultation on the future of making tax digital for corporation tax. They've indicated that they won't make making tax digital for corporation tax mandatory before 2026. This comes after the announcement of the extension of MTD to the remainder of the VAT registered businesses with turnover levels below 85,000 from April 2022. And for the non-incorporated businesses, including landlords and subcontractors, by April 2023. I've been saying to clients, what's the betting that they will roll it out for companies in April 2024? Thus you can imagine my surprise to learn that it will start no sooner than 2026. I've no doubt I'll be creating more videos to provide more insight into what impact this will have on owner-directors of limited companies over the next few years on the run-up to the introduction of MTD for companies. At this point, however, I'll cover one of the issues that I suspect will cause big problems to a large majority of companies, though I'm glad to say not for clients of DEB. If you look at this extract from the consultation document, you can see here that amongst a much wider range of information that businesses will be required to report on a quarterly basis is the amount of dividend payments that they make. To illustrate the problem that this will pose to a lot of business owners, let's consider a simple story. Please note that in this story all the characters are completely fictional and no business owners have been harmed in the creation of this video. Arthur runs a business called Camelot Carefree Limited. Arthur has a superb accountant called Merlin. Merlin has incredible magical powers to make things right for Arthur every year when he does the accounts for Camelot. Merlin magically does just what is necessary to make everything right for Arthur when he takes his records to him. Merlin is so good that he can do this by hardly ever speaking to Arthur, and in fact Merlin has perfected his own business so well that he ensures that he doesn't have to tell Arthur anything at all. Arthur knows that the money in Camelot's bank account belongs to him, and thus he sees nothing wrong in transferring by standing order £5,000 a month directly to his personal bank account. He also uses the company debit card to pay for most of his personal expenses, which amount to around £4,000 a year. At the end of the year, he takes his bank statements and his checkbook stubs to Merlin to enable him to perform his magic. In the years gone by, Merlin considered the amount of spending that Arthur had made through the company bank account and used his magical skills to create salaries that he and his wife Guinevere had supposedly taken over the course of the accounting year. This conjuring trick was thwarted a few years ago, however, by the introduction of real-time information, whereby HMRC required businesses to report salaries to them month by month. Merlin, however, adapted to this crisis by running a payroll for Camelot, but as he did not speak to Arthur, he did not inform him to pay the precise net amounts that he calculated, and Arthur never saw any payslips. When Merlin found out that the money Arthur had taken was greater than the salaries he had reported to HMRC, he had to resort to his next piece of magic. Using his crystal ball, he could see that Arthur really decided to approve dividends during his year, which by his magical powers were just enough to cover the payments that Arthur had made to himself. Arthur thought Merlin was marvellous, though he sometimes was a little surprised when he got tax bills which seemed to come somewhat out of the blue for both the company and for himself. HMRC felt aggrieved about what Merlin was doing, as it denied them, in their opinion, of the opportunity of raising tax from Arthur and Camelot when it should be paid. However, they introduce some magic of their own, called Making Tax Digital, and required that dividends be reported to them digitally every quarter. Faced with such a situation, Arthur needed to make urgent changes. But as he rarely ever spoke to his accountant, Arthur remained blissfully unaware. He thus continued to do exactly as he always did, though he did have to bite the bullet and do regular bookkeeping on MTD compliant bookkeeping software, just so he could do the quarterly reports and avoid fines from HMRC. Let's look at what Arthur's spending out of the business bank account would look like. In each quarter, he would have taken 3 monthly amounts of £5,000 and £1,000 in private payments. His quarterly reports to HMRC would not mention any of these payments as being dividends. He had no idea what a dividend payment was, nor how one should be done. When Merlin does his usual year-end magic, all of a sudden, after the year end, the dividends miraculously appear and get reported by him on the final amendments made to HMRC under MTD. HMRC have waited for this situation for many a year. They know from the quarterly reports made by Arthur that no dividends were paid in each quarter. They also know that the dividends that appeared on the final amending return are a product of Merlin's involvement months after the end of the accounting year. They immediately open an inquiry into Camelot's tax return and make a call upon Arthur to discuss this situation with him. They first of all destroy the myth that dividends were correctly taken. No dividends were reported on the quarterly returns, so even if they believed that dividends were done, they would have been done by Merlin when he performed his magic some date after the end of the year. Unfortunately for Arthur, the following year was the one in which he started to take his pensions. This unfortunately caused the dividends to be subject to tax at the higher rate dividend tax of 32.5% instead of only 7.5%, as they would have been if they'd been correctly established as dividends during the accounting year. However, HMRC correctly point out that there is no way that the amounts that he paid out of the company bank account were correctly determined dividends. For there to be valid dividends, the directors must have had a meeting to consider the profitability of the company and ascertain if a dividend could be legally made. There was nothing to prove this had been done. The dividends should have been documented, but HMRC didn't believe that the retrospectively produced documents that Merlin had quickly created were genuine. HMRC also point out that as the money had been paid by standing order, they were predetermined payments, and thus could not have been as a result of any careful board consideration that was a necessity for a valid paid dividends. There was of course no way that he could put forward a similar argument for the numerous minor private payments that he also made from the business bank account. Merlin then, somewhat desperately, tried to argue that these were funds taken out of Arthur's director's loan account that were made good after the year end by the dividends that were declared. HMRC might, if they were in a good mood, accept this fiction and assess the company for tax due on the overdrawn loan account. However, sent in victory, they argued that the money taken from the company by Arthur was obviously salary, and he'd failed to report this under PAYE, and thus they raised assessments for the tax, employees' national insurance, employers' national insurance, and added to this penalties and interest. To add insult to injury, Arthur also had to pay £4,000 to Merlin for the charges that he raised for helping him with the inquiry. The introduction of quarterly reporting of dividends under Making Tax Digital would lay bare the practice that Merlin, like a lot of accountants, has got away with for years. At DEB, we speak to our clients and provide them with not only an understanding of how and when to do dividends, but also the means of doing and recording them correctly. All our clients can declare and document their dividends by using the facility on DEB Connect, and do so as part of a well-designed strategy aimed at minimising their tax liability. Please see our video on dividends, which explain the correct way that dividends ought to be done. Under Making Tax Digital, Merlin would need to change the way he treated clients. If you have a Merlin acting for you and would prefer to approach the introduction of MTD with confidence, knowing that dividends are done correctly and strategically, please give us a call on 01226 245824. We'd be delighted to speak to you in a free non-commitment meeting to discuss you and your company's situation. Thank you for watching this video, and if you've not already done so, please subscribe to our YouTube channel so you receive notification of new videos when we upload them. Bye for now.